Hello, everybody. So today I want to talk about a company called Nebius. And this is a new company. Their IPO is about 3 months ago, It's interesting because it's a spin-off of a Russian company known as Yandex. And Yandex is the Google of Russia. It was a very successful company from 2015. You can still find the chart online. It did something like a 7 or 8x until the war. And of course, then there had to be a spin-off. And the CEO himself was part of the spin-off. And they founded this new company called Nebius, which owns a bunch of assets that they were already working on with Yandex and a few startups, and also a new plan, a new business plan, and a management team that, although seems new, has actually been working together for a long time. And the management team at Nebius, they say. I listened to this call with them. The CEO and the chairman say, they've been working together for just about 30 years. So this is an experienced top management team. The CEO of a former leading company, Yandex, who just had to do a spin-off and had to create a new firm and start over from scratch in the West, in Europe, in Amsterdam in that case. So they're now building, in my view, another mini big tech company. And that's sort of the way I look at it. And the spin-off includes the main AI GPU business, AI infrastructure business, but it also includes side businesses, which I find quite big. And a big part of the thesis in the stock is really the belief in the management, the belief that the management has a proven track record and the management has a lot of relationships, which is why we can explain the investment from, a month ago, just about of 700 million by Nvidia into Nebius. And so that investment really happened likely as a result of relationship between the CEO of Yandex and the CEO of Nvidia. Yandex having been the most successful tech company in Russia. So let's talk a little bit about the business. The core business called Nebius. It's an AI infrastructure business where they install, run, and rent an AI cloud and AI infrastructure and AI GPUs. And they have a platform where people can access their GPUs via their own cloud. They have a specialized cloud. They differentiate themselves from hyperscalers and from private clouds. They try to be a competitor to CoreWeave. And CoreWeave, as you know, is a company probably valued more than 30 billion now. And when people compare this company to CoreWeave, they are in disbelief as to the lack of valuation of Nebius compared to CoreWeave, because Nebius, the enterprise value is 5.5 billion right now, and CoreWeave is purported to IPO at more than 30 billion. Granted, CoreWeave is a little bigger, but not that much bigger, and the plans are definitely in favor of Nebius becoming much bigger. And so a lot of people are saying this company is actually heavily undervalued. There's also the issue that there's no analyst covering the stock because it's a brand new stock. And as soon as analysts start covering the stock may get noticed by more and more on the market. This is a brand new issue, a brand new stock. So let's talk about the main business. Let's talk about the data center business. Their cloud, their AI cloud. And so what do they do right now? Right now, the bigger part of the cloud is in Mäntsälä, which is a city in Finland. And they are very proud in this data center because they claim to have a very low cost of cooling. They claim to be ready for Blackwell. They're also deploying something in Paris, another big data center in Europe, and they're building another data center in Kansas City. So they will have 2 data centers in Europe, one in Kansas City. So the business is still going to be European centric, and so that's probably why Nvidia shows it as a partner over there. Less competition. Also remember, there's a lot of sovereignty that goes on with these data centers. A lot of discussions of people are saying, the data in Europe needs to be analyzed and stored in Europe, and the models for Europe need to be trained in Europe. So there's this whole narrative that builds in a lot of customers that would not necessarily be out in the US. And so that creates an interesting business. What's the core business in a few words? So they claim to have better tech, better cooling in the data center, lower cost cost of operation. And if you look at this, they claim to be, well, I guess a little more expensive than GCP and Azure, but cheaper than Oracle as far as the cost of operation goes of the data center, and that is expertise that they would have from Yandex. They claim to have more control over the data centers because they do in-house design, they make their own servers, racks, whatever, and they also are more than just bare metal. It's true that a lot of these GPU companies are simply GPU rental companies, and they don't necessarily include software with it. This is a company that is led by former big tech leaders, and so they are selling software in addition to selling the hardware. They're building a full AI platform with the software and the hardware together. And you can see, so these are some of the products that they offer, and it's pretty much everything for the cloud. Okay, I lost it now, but they do other things. They allow you to run models, a lot of large language models. For example, Mistral AI they run. They're ideal for inference in Europe. They claim for tokens. For these large language models, you got to generate a token. They are much faster because the data center are in Europe over there. They claim to have a team. They don't claim they have a team of expert in software development. I like to see the team mostly being engineers, mostly in software. Not a lot of fluff, not a lot of marketing or management. It's a newer company built really with tech in mind, and they claim to have a lot of competitive advantages, of course, in the space, starting with AI, ML, and software engineers helping them do the business. They also have relationships. You see, they talk again about their relationships and their long-standing collaboration with Nvidia. Lastly, they talk about their sole focus on AI infrastructure, which is new. It's true that the hyperscalers, the GCPs of the world, they have their core audience, their core business. AWS and Netflix, they run Zoom. That's the core cloud business. AI is an addition. Then they're starting from scratch, and they're just doing AI from scratch. And so that is a selling point, they believe. Again, they hope they serve a large list of clients, and that's Gen AI app builders, model builders, and so these are all sorts of clients that they have. And you can see they explain more their competitive advantage right there, and what makes them different, what makes them stake their own niche compared to what they call the bare metal, Tega cloud, voltage cloud, GPU clouds. That would be core, we just talked about, and then hyperscalers, which do just about everything. So they have their own differentiation in the marketplace, and that's the core business for you. And so the story is installing the Nvidia GPUs, installing Blackwell. There's going to be a lot of demand for Blackwell for years to come, and some of that demand, hopefully, at least that's what the CEO hopes, is going to go through Nebius, especially that European demand, but also demand from all over the place, because this AI mega trend is real, and as says Elon Musk, says, we'll take everything you got from you, Jensen. We'll install everything you got. And so it's squarely rooted into the AI business. Now, what I like, and this is going to sound odd because of course many people think these are real options, but what I like about this is that beyond being options on the future, these 4 different businesses, well, one of them is a stake in a much bigger business, and all of these are independent business. I could think of these businesses being single $1 billion companies alone. Granted, maybe I would find them overvalued, but I could see these businesses be single companies. Triple 10, that's a EdTech platform that was named the #1 boot camp in America for software engineering and for reskilling. And I see this as competition to a lot of what the universities do. Then they talk about their data provider, their Toloka AI is a data provider that helps AI agents train on, and they have a partnership between Toloka and ServiceNow, for example. They're a very up-and-coming, growing provider of data, and that too in a single IPO I could see being very valuable. Maybe not $1 billion, but probably a few $100 million. And perhaps the one that's the most interesting, and at least as far from a valuation standpoint, is AV, right? So we know Waymo. Waymo is discussed. I've seen the valuation of Waymo being all over the place, but people say between 40 and 50 billion. AV, right? They already give rides, and they have a partnership with Uber. So Uber clearly finds them serious. Also, remember these companies, AV Ride or Waymo, they've become valuable ever since Cruise has dropped the race, and so there's a few minor players. They are in Austin, and they're the only company too that works on these delivery robots. I've seen documentaries about these, and they're pretty happy about that. It's the only company in the US. So this is no small business. This is no small business. This is perhaps a little bit smaller of a business, but growing faster. And then you have ClickHouse, and ClickHouse is a columnar database. This eerily seems like a minor competitor to Snowflake. So what's that 28% stake worth? Well, my view is it's probably worth quite a bit, because that's one of the hottest fields out there, and they own 28% of it. So their venture capital arm I find very exciting, and in my view, this should probably knock off a few $1 billion from the enterprise value of this company that we see. And lastly, let me get to the valuation, and let me get to what I love, which is the CEO is very confident. The CEO provided us with guidance. We have guidance. They've predicted to grow revenue by 3x to 4x to between 500 and 700 million for the full year of 2025. We don't know what they did in Q4 2024, but they've predicted between 120 and 130 million of revenue in 2024. And so with those two numbers, even though there's no analysts, I can still extrapolate what the forward growth number is, taking the midpoint. And so I am calculating that they're predicting us 233% next 12 months revenue growth, growing from a base of 180 million. This comes from another spot of the annual report, by the way, because this includes some of the business from the subsidiaries as well. So that's why it's a 180 here. So 233, and if you take a smaller number, you see that could be even bigger. So I'm calculating a 233 next 12 months growth potentially for this company. So absolutely outstanding growth number. That's really helping it rank really, really well in this. I'm also putting a 1% EBITDA margin, because they said they would reach positive territory on adjusted EBITDA sometime in 2025. So I'm going to put a 1% right here. The gross margin I calculated is 56%. It's hardware, so it's understandable. So when I look at the valuation, I get a 0.24. So you can see not quite as cheap as SMCI. I mean, SMCI is definitely SMCI is the cheapest stock in this sector. And I analyze a lot of stocks in the AI hardware space. SMCI is still the cheapest, but second cheapest, nicely the second cheapest here at a 0.24. So that's pleasant, and that does not even include the fact that I think probably a few $1 billion could be removed from enterprise value to account for these four businesses that frankly look like businesses that a Google would own, right? Or an Amazon would own, right? They look like serious businesses. So I find this company very compelling. I haven't made any decision as to whether I'm going to enter it or not. I will let you know on Patreon. And so since this is a Patreon exclusive, you will see if and when I do. But that's a very interesting company to me. And as you know, I'm trying to increase my exposure to AI hardware stocks, and this definitely looks like a good candidate. So thank you so much for watching. This was not financial advice, not investment advice. This is just entertainment. I hope you were entertained. Please like, please subscribe, follow me on X, and follow me on Patreon. Keep following me on Patreon. Thank you. Have a wonderful day.